Welcome back. Now, the automotive industry has welcomed several commitments emerging from this year's State of the Nation address, from protecting local manufacturing and tightening tariff policy to supporting new energy vehicle investment and accelerating logistics reform. NAAMSA says policy certainty, technology neutral incentives and improved infrastructure will be critical if South Africa is to remain competitive in global automotive value chains. The organization's Chief Policy Officer, Litheko, joins us now for greater perspective. Tshetlhe, thanks so much for your time today. And I guess let's start there. Your initial reaction when it comes to SONA. It's really been a mixed picture for the auto industry. While on the retail side, things are really resilient. On the manufacturing side, things aren't as bright with, of course, the global competitive landscape and shifting trading dynamics.
Yeah, thanks, and good evening to all your viewers as well. Look, competitiveness is, I guess, the right word for us to pivot from for this conversation to be meaningful. So any type of, for South Africa's local manufacturing to continue to thrive, we need to be competitive in our local market and in how we make vehicles available for that particular market. But we also need export competitiveness in terms of the markets that we compete to be in, so that we could continuously produce for cars that the world is buying.
Yes.
And over and above that, given the trends, so for instance, and as you rightly said, in Europe, for instance, is where we're sending almost 80% of our exports, and the profile of vehicles that the EU is buying from us is also shifting. So competitiveness for South African produced vehicle means that we ought to be in a place where we are able to produce cars that are of that profile. In this case, cars that are of a new energy vehicles variety. Whether it's plug-in hybrids or battery electric vehicles or range extenders and all these type of new energy vehicles that are emerging tech. So you're rightly saying that if there's policy interventions that can safeguard local production by ensuring that we're able to produce these products, then we support that policy certainty in order to drive our motor industry forward.
Are we moving fast enough when it comes to the NEVs and policy around that?
And it's a catch-22, and I'll say, you know, they always say, is it a chicken before an egg? So if you take an average OEM, they would decide on a production cycle of 7 years, but they will decide 3 years before the 7-year production cycle starts. And so those decisions for cars that we should be producing, say, come 2035, are effectively being taken between last year, this year, and next year. So we are in that fragile window where we should be getting investment decisions that are designed to ensure that South Africa is part of a production cycle that's able to produce the cars that Europe are saying they need from us in terms of profile. And so we are at a place where I guess anything could be late or it could be timely, depending on how fast we move. But there is that particular, it's a very sensitive period that we find ourselves in.
I'm wondering how much a spanner in the works, the global competitive landscape throws in, right? We do know of the affordable Chinese and Indian vehicles coming into the market, and that, of course, raising a question when it comes to manufacturing locally, right? How much of a spanner in the works does that throw to those OEMs that currently have plants, have factories in the country? Because yes, at the end of the day, they are trying to make profits.
Sure. So local competitiveness, so if you were to take an average car that we produce locally and you were to compare it to its peer that's being imported, we're looking at a very wide range. And this range ranges from 10% all the way to about 30%, depending on which vehicles you're looking into. But on the assumption that there are policy levers to offset at least 10% out of the current vehicles that we are producing locally.
Okay.
And these policy levers do exist. You're creating then that parity, and then you leave it to market forces then to determine which particular brand will then thrive or win within that balancing act. And so it is an equation that's easy to solve by virtue of just discussing that parity scenario that we would find ourselves in. I guess the one challenge, though, is it's not something that you throw a universally applied tariff revision regiment where you'd probably go, everything goes up by 10% and then expect that outcome to then deliver a market appetite for vehicles that we produce ourselves as a country. So it needs to be measured. It needs to be something that you work out and you figure out where the right sweet spot exists.
So naamsa is in support of those tariff reforms, the plans we heard. Okay, no.
So naamsa is not in support of
Okay.
Of using the bound rate, which is a universal application of tariff. So a bound rate says we could increase tariffs by up to 50% without WTO frowning at the adjustment itself. Now, if you do that, you're going to have to apply it across the board. So it's not only going to affect just the Chinese and Indian imports that at least you are purporting in media to be targeting. It will affect everyone. And so that would then have inflationary shifts for everyone. And those that are cheaper would remain cheaper because everything is being adjusted by a similar type of tariff increase. So if the conversation was how do you safeguard the local industry and you maintain tariff integrity, then you therefore have to work out if there's a market distortion created by China, having had a very long period of producing these ICE vehicles for their local China market, that all of a sudden China is not buying from them. And then they decided to share these particular production with the rest of the world. And has that caused a market distortion in South Africa? If it is found that there is market distortion that comes from that flow of imports from any particular region, that market distortion can be corrected through a safeguard measure. And that particular safeguard measure would then target a specific brand or a specific segment of vehicles in order to protect the local market. And that's a different conversation from the conversation of increasing up to bound rate up to 50%, as it was purported last week.
A lot of moving parts, so I can imagine that it's quite an effort that will come out from lawmakers. Before I let you go, let's talk about US as an export market. We have the 30% tariff still in play. Even though, AGOA is back and it's extended, that does not wipe out those that 30% tariff. How are we positioning ourselves for that market?
So I think at a political level, we might not have any influence. So if Washington and Pretoria are still not seeing eye to eye on other particular issues, and that's the reason why we have this particular imbalance in trade, perhaps that's nothing we could do to lift that up. But just so that there is perspective to your viewers as well. So our exports to the US are not particularly damaging to the entire picture of export profiles that we send into the world. But to one or two OEMs, they are particularly very, very, very devastating. So if you viewed the US market, the US market to South Africa is a luxury vehicle market. And there's certain luxury vehicles that we're producing as a country that otherwise we would not be able to export anywhere in the world but to the US. And that the loss of that production is really, really, really devastating news for one town in South Africa. And so you have to put that perspective in mind. Now, people would assume then that market diversification or market redirection is an easier outlet for us to find an alternative destination for those vehicles. But when you go into a production cycle of 7 years, you tie yourself to a business case that is attached to that one particular market. And oftentimes to diversify your business, to find alternative markets, is not as easy as we might assume it could be. And so, it becomes a challenge. The challenge then with the United States, though, it's also second part that your viewers need to understand is whatever tariffs that are being charged to another market that makes the same vehicle, South Africa needs to be on par with that. What do I mean? If a car is being made in South Africa and it's sent to the US, and a similar car is being made in Europe, also being sent to the US, those particular cars should have a same type of tariff treatment for the South African vehicles to remain competitive. And the challenge has always been how well do we negotiate and how do we keep our government informed on how to negotiate a better deal or a similar deal to that which the EU has received from the US.
Tshetlhe,
if we're able to be on par with that, then the same car should be able to still remain a viable export to the US market.
All right. Unfortunately, we have to wrap it up there. Tshetlhe, thank you so much for your time and taking us through those dynamics playing out in the auto industry. That was Litheko, Chief Policy Officer at naamsa.